So what's your assessment of the Chinese recovery, the slow recovery right now, and the need to attract the attention and the goodwill of foreign businesses who are here and are mulling and maybe are cautious about investing in China?
Well, Steve, great to see you. Since China exited zero COVID, the economy has clearly been in the course of recovery. Although the strength and the speed of recovery may come below expectation, because China today is really a super tanker. Right?
Yeah.
It takes time to turn around. But I think there are a lot of positive signs. You mentioned, the Chinese leaders really focus on winning back confidence, confidence from domestic private sector entrepreneurs and tech funders, but importantly, global business leaders and the global investors, because China is an integral part of the global economy.
Are words good enough, though?
Words are important, given 3-year isolation. There's not much interaction exchange going on between China and the rest of the world, and the misconceptions, even fear, have built up because of the lack of contact. So I think it's important, the Chinese leaders, are good communicators, consistent communicators, and reassuring communicators, and then follow those words by robust, consistent actions.
Exactly. We're coming out of a regulatory crackdown as well. And then there's also sort of a crackdown on due diligence companies, consultancies. It kind of makes people worried, foreign businesses. You're in private equity. Has it affected how you do proper due diligence on any investments in China over the last 3 years?
Not yet. We are still able to do as thorough, as in-depth, as rigorous the due diligence we wanted to do. But of course, we have paid attention to those incidents you just described, and we take them very seriously. And I personally hope those are more exceptions than norm. Okay. China, obviously, like any country, needed to take care of some of the narrow-focused national security concerns or data security. But, I believe, China's national priority is economic development.
Right.
So
they want to unleash the entrepreneur. That's the theme of this one. Obviously, there's been a huge crackdown on the platform economy. You know that very well. You were an early investor in Alibaba. You're an Ant board member. Where do you see the next step for them to be a driver of growth? Alibaba is breaking up into 6 different companies. They're going to list separately, probably. Cainiao, which I believe you're a board member, or you were an early investor in that. They might be the first. Is this going to be the next wave of IPOs for Hong Kong? Bonnie Chan, the COO of the Hong Kong Exchange, says this next specialist company, Chapter 18C, is going to really lead to a boom in Chinese tech, like AI, specialist AI. Do you see that coming soon this year?
So first of all, we all know the thriving technology sector, need to have a thriving financial market, to go hand in hand. So, in the U.S. is still the undisputed global leader in technology innovation, but that also has to do with the advanced U.S. financial system, and Nasdaq and the venture and private equity financing in particular. So for China to succeed, as innovation powerhouse, it's very important, for Chinese tech companies to access capital markets, access private financing without any impediments. So crackdown of last few years definitely has dampened entrepreneurial confidence and investor confidence. So
So when will there be? When is the market and the sentiment going to return?
We have seen a lot of positive, reassuring words from Chinese government and the regulators. So now those positive messages need to be followed by actions. So I believe that the government is very constructively engaged to pave the way for those leading technology companies to come to the capital markets in Shanghai and Hong Kong.
We're going to be watching it very closely, obviously. Fred Hu, thanks so much.